Despite some significant volatility in the crypto markets and me covering some of the wider macroeconomic and geopolitical risks in recent videos, I am still very bullish about crypto in the long term. And in this video, I'd like to share a few reasons as to why we could see a huge new bull run in the next 12 months or so. So please do like the video and subscribe to the channel so I can continue to offer more content for you in future. Just a quick reminder, you can contact me if you're looking for crypto coaching. You can sign up for a free account with Coinly using the link in the description to this video, which is one of the best automated crypto tax platforms out there. If you're looking for more specific tax advice based on your personal circumstances, I've partnered with a leading crypto tax company in Myna, which is part of the company Nephos, that offers other services such as wealth management, restructuring, offshoring, etc. But I'll leave a link to contact them directly in the description to this video if you'd like to. And finally, I've included a link to Trezor's website in the description for anyone looking for one of the best hardware wallets or cold storage out there, with two new models released recently in the Trezor Safe 3 and Trezor Safe 5. Just a quick reminder that nothing contained here is financial advice, and let's jump straight in. Firstly, we are seeing an increase in global liquidity according to the Global Liquidity Index, as you can see here since the lows towards the end of 2022. And this is showing the liquidity cycle, with it generally following a cyclical pattern over time, which, to put it simply, goes up when central banks and governments need more liquidity and are conducting quantitative easing through the various means that they have at their disposal, and then goes down when governments are tightening the financial conditions and amount of liquidity, also known as quantitative tightening. And you can see that it is predicted to follow the cycle and continue to increase from here, which we'll look at a few examples of in this video. And global liquidity is quite difficult to calculate exactly because it flows like liquid, hence the term liquidity. And the Global Liquidity Index is one of the measures to see essentially how much money is being printed and is flowing around the world. Because obviously the more liquidity there is, the more bullish investors are, especially when investing in riskier assets like crypto. But when liquidity is decreasing or economic conditions are tightening, investors want to place this in safer financial instruments or mechanisms and hold it there until conditions improve again. And if we look at specific examples of the increasing liquidity into financial markets, let's start with the United States, which has the largest economy in the world. Because if you look at the M2 money supply in the US, which is one way of seeing how much money is in circulation, you'll see it here over the past year, with this increasing from lows of $20.69 trillion in October 2023, going up to $21.17 trillion by August 2024, which is an increase of $484.7 billion in this time frame, or about 10 months, which matches up with the increase in the Global Liquidity Index that we just saw. And it's a similar situation if you look at M2 over the past 5 years, with the obvious increase you can see since 2020, and with us not seeing a drop back down to those levels of before 2020 in money supply, although it did decrease, as you can see, given the tightening that's taken place. But again, if you zoom out a bit further and look at the past 10 years, the M2 money supply has actually nearly doubled, going from $11.4 trillion to $21.1 trillion in this time frame. And finally, if you look at the M2 money supply for the United States since 1959, it's even more dramatic, with the figures on the left being in billions of dollars. So it goes $4 trillion, $8 trillion, and up from there in increments of $4 trillion. So you can see the huge scale of essentially money printing and increased liquidity over time, and therefore the debasement of the US currency, increased inflation, and the reduction in purchasing power of the dollars that you hold. And it's not just in the US, as we'll see soon. But for a more recent example in the United States, I covered the increase in US Treasury bond issuance in a video that you can find a link to here and in the description, which again increased the amount of liquidity in 2024. And if you're interested in keeping track of this yourself, I would also advise people to keep an eye out for the Federal Reserve's FOMC meetings and key economic figures that are released, with the next one taking place on the 6th and 7th of November. So global liquidity seems to be on the increase, and it's not just in the United States, because we can see that China is also adding liquidity into markets through capital injections in its major state banks, cutting the reserve requirement ratio for banks, and lowering its 7-day reverse repo rate in order to try to help its economy. However, in a briefing by the National Development and Reform Commission, or NDRC, that took place on the 8th of October, investors' expectations were high, with many expecting more announcements of further stimulus. But it ended up being really a general briefing with no details of this given. And coupled with the rally that preceded this, after China's initial announcement of rate cuts and increased liquidity, investors were a bit underwhelmed and some took profit. But the outcome was that China's stock market fell. For example, the Shanghai Composite Index fell by 4.6%, ending 10 days in a row of growth. And here you can see the CSI 300, which is basically an index of the top 300 stocks traded on the Shanghai and Shenzhen stock exchanges, with the decrease you can see here after that announcement on the 8th of October. But China's finance minister then announced on the 12th of October that it will issue 2.3 trillion yuan's worth of bonds to boost its economy, which is worth over $325 billion, which will add even more liquidity and which is positive for assets like crypto. So you can see the recent positive reaction of the CSI 300 stock market index to this stimulus package announcement in China, which has basically decreased since 2021 and which recently hit 4,000 for the first time in over a year, wiping out a lot of losses. And let's take a look at liquidity in the UK too, because if we look at the UK M2 money supply, it's a similar situation to the United States, albeit on a smaller scale, because the money supply in the UK has increased by over £31.5 billion since October 2023, so in 10 months, with that actually decreasing since the end of March 2024. But if you zoom out further, you can see the huge increase in money supply in the UK since 1987 here, when the M2 money supply was about £256 billion in that year, increasing to over £3 trillion currently, which, to put it into perspective, is an increase of over 1,000%. And it's a very similar situation in the EU, with you being able to see the increase in M2 money supply over the past year here, which has increased by over 288 billion euros in that time. But again, if you zoom out, you can see the huge increase in the money supply in the EU over time, reaching over 15.3 trillion euros at the end of August 2024. So we've looked at the increase of global liquidity in the US, China, UK and EU. So let's now take a look at interest rates, because we are seeing interest rate cuts also. For example, the US cut interest rates by 50 basis points at the last FOMC meeting of the Federal Reserve on September the 18th, after a long period of increasing these that you can see here, now taking us back to the rate of 5% that was last seen from March to April of 2023, with these predicted to fall further over time, because the current probability of further interest rate cuts, according to CME FedWatch, is an 89.5% chance of a 0.25% cut in the next Federal Reserve FOMC meeting in November, but also a 10.5% chance of Jerome Powell at the Fed simply keeping these the same based on recent CPI data, which had increased more than expected. because the probability of a 25 basis points decrease in the next meeting was actually 97.4% before this data was released, so it has reduced. China is cutting various rates too. For example, as you can see here through its loan prime rate, which went down to 3.35%. And another example would be the Public Bank of China also decreasing its medium-term lending facility rate down by 30 basis points to 2%, which is the largest decrease since China started using this monetary policy tool to guide market interest rates back in 2016. We can also see the decrease in interest rates in the UK here too, being decreased by 0.25% at the end of July 2024 down to 5%, with again you being able to see the large increase in interest rates since the end of 2021, beginning of 2022. And finally, we can see that the ECB, so the European Central Bank, has decreased interest rates twice for the EU in 2024, once in June and then again in September, with another decision being taken by the ECB on October the 17th, which is after I actually record this video. So to summarize, if there's a large amount of liquidity being added to financial markets around the world and interest rates are being cut, as we've seen, consumers and investors will feel more confident, which in turn means that assets and risk assets, particularly like crypto, should increase significantly, which is why I am still very bullish about crypto in the long term, with there of course being other metrics and reasons we could look at also. For example, with the large Bitcoin accumulation over the past 2 months that you can see here, and an increase in BTC being taken off exchanges, according to Glassnode, which again is bullish for crypto. So we could see huge returns in the crypto market in the next 12 months or so, with this being significant for many crypto investors, which is why I started this channel in the first place, to educate people on the crypto space, with the aim of hopefully helping and seeing people make large gains. But just to caveat this a bit, because I do always try to look at both sides of the argument, rather than just shilling things, providing hype, or even FUD, but no one can be sure, and there are things that could derail this. For example, a black swan event with the further escalation of the conflicts that we're seeing around the world, the US or several economies going into a recession, etc. But overall, I do remain bullish for crypto. So that ends this video, and as always, I'd love to know what you think in the comments below about it. If you are interested in more of a tailored approach to your crypto education, and you think you'd benefit from having someone look over your shoulder and guide you on your journey, I do offer one-to-one coaching to those who have the desire and the means to educate themselves further. And there are links in the description where you can message me and book in a free video call to see if we'd be a good fit. There are also links to Coinly, Trezor, and to contact Myna or Nephos in the description of this video also, as I mentioned at the start of the video. And if you found this content interesting, please do like the video and subscribe to the channel, as it really does help. And have a great day.